All right, I say hello and welcome to Stock Market Mutterings Daily Trade Review and Recap for October 24th. Got a little aggressive there at the end, didn't it? Sure did. Now, this is something that I think we kind of saw coming because we talked about it yesterday. We put the emphasis on that 270 SPY. If you guys are just tuning in for the first time or you missed yesterday's mutterings, I want you to go back and watch it. I'm going to touch on that for everyone here in just a second. So this will kind of help you out with your trading. Before I get started, I know you have questions. Hopefully I can deliver the answers for you today. But before I get started, remember, if you need help with your personal trading, you're struggling in this type of market, visit thelincolnlist.com, click on the trade room tab, and you can start trading with us live right away. So let's talk about this. I want to start out, before we talk about the trades that we made today, which you already saw on the screen, I want to talk about this market because I know that's probably the biggest topic on everyone's mind right here. Where are we going? How far is the selling going to continue? What should I do with positions I have, and etc. And again, I'll try to do my best. First, I want to talk about that 270. We talked about that yesterday in the mutterings, and the important part of that number was, if we go back, first of all, that is where the market bounced on the 11th of October. So once this sell-off first started, the first initial flush on this sell-off in the markets, the SPY got down to 211, and that's the spot that it decided it wanted to bounce. Now, a lot of you, when you're trading a stock or the market or whatever the instrument is, you see a bounce and you just say, okay, it bounced. But you never, a lot of new traders make this mistake. I'm not saying everyone, but many traders will make the mistake by not trying to figure out, well, why did it bounce here? What's the relevance of this number? Because remember, these are not just numbers that are drawn out of the air. This is why we use technical analysis. A lot of traders will say, hey, it's bullshit, it doesn't work. But yes, it does. If you know what you're looking for, it does work. It's not perfect. It's not the holy grail. But remember what I've always said. It's all about helping you make a decision, gathering price data so you can get the best entries possible and manage your risk the best way that you can. Now, moving on from that, let's talk about that 270. So that was the first time that it bounced there. That was the number that it bounced on. When you look back, there is relevance to it. Excuse the messiness on the chart, but I'm going to open this up just a little bit for everyone. The first spot, here's what I drew yesterday in the mutterings, was back in later June and early July. You had a bounce down around that 269, 270. Again, it doesn't have to be to the penny. It's just an area of reference when you're sitting there and you're wanting to know if the market's dumping. Should you cut your positions? Should you bail on a trade? Take a look around for a moment. What is the chart telling you? Remember, the chart does not lie to you. You might make it lie to you, but it doesn't lie to you. Just look at the price. So this was an important number. That's the reason why it bounced there. Now, not only that, if you go back a little bit further, you'll see late May, just around right after Memorial Day, it got down to that same very number and bounced. So there was relevance to that 270 spot. Also yesterday, the market went underneath of that for a shorter period of time, but managed to claw its way back and just slightly, just kind of close above that. So going forward, that's what we said. If this market wants to hang on to this and it wants to build off of this base, that's the number you've got to be looking at the downside. If you start getting back down into that area, you start selling off, or you start getting pressure in that area, it could get more aggressive. It can definitely sell off a lot more than this. And that's exactly what happened today. Better yet, here's what I want everyone to focus on. Remember, I said the charts don't lie. Just take a look at the chart. When in doubt, look at the chart, okay? Remember that. Look what happens today. It takes off right from the open and the market just sells, right? Just sells. And you're going to see that stocks are the same way. I'm just using the market as a general reference point for everyone. But you're going to find out the stocks you're trading, they're probably behaving the very same way. It goes right down into 270. And look, it stops. So when you're sitting there and you're like, wonder why it's stopping here. This is why, because this 270 has been that anchor point for this market going all the way back to May. So we're talking 6-7 months or whatever this is. I might be wrong with my quick off the top of the head math, but a long time. It's held 270. So it makes this bounce. And then what happens later is you re-rotate under that. That's where it really got bad because it was unable to distance itself from 270. It retests that and it goes through that. And then later on in the day, it's just unable to get through 270 for very long. Most of the stocks that were bouncing weren't even finishing off green bars on just a couple minute charts before they were getting stuffed. And then by the end of the day, it just succumbs to the pressure and down it goes. So a lot of times these things, these sell-offs, these changes in the market, or even when it's not about a market sell-off or a market correction or a breakout in the market, everything that you do when it comes to trading revolves around price. And how do we dictate price? How do we figure out what price to enter a stock? Charts. How do we figure out where to stop and take a loss when that chart becomes when we know we're wrong on the chart? How do we do that? It's in the chart, right? The price, it's right there in the chart. How do we know when to take profit? It's right there in the chart. All the answers that you're looking for is right there. So let's talk about tomorrow. You've got to say here, this is pretty nasty. The difference between this and February, when you got back in February, yes, you had a very aggressive sell-off in the chart that resembles very much what you have now. But back then, the market was above the 200-day moving average. Here, it's been below the 200 moving average for quite a few days now. That's a very bad sign. That is kind of like the longer-term line in the sand between good versus evil. That's just bad. The longer that it stays under here, the more likely you are going to see another rotation lower, okay? Maybe that doesn't happen tomorrow or the next day. There'll be brief rallies in bear markets. Don't think that there's not, because there is. But if you don't get back up over that here relatively soon, and now it's quite a good distance away, you're 10 points. You're going to need a solid rally here. Then expect this thing to roll over. Now again, look at your charts. Where does this thing tell you it may end up going? Well, you're already down here. The next line of reference is this 258 right here, which was the low from May 1st. And then you're going to go back to what is very close to a double bottom, which was the low from that initial sell-off. Let's just put up a number here for reference, which is about, let's just say 255. It's probably a little bit less than that. Roughly in that area, you had a low on, I think it was, yes, what was the low? 259, was this 250, sorry, 254, 254.67 was the low there. And was on the 9th? 252. So let's just say 254s. Let's give ourselves a nice little rate. 254 down there is a very real possibility right now, taking you back to that level. And not only that, this 270 was just about right there where we were when the market opened at the beginning of the year. So if I go back, I can't go, yeah, right here. If you go back to the opening price of the year, I think it was somewhere around 268.5. So you're now negative for the year. So that 270, 268 spot, you can now see how important that was. That was where the market opened roughly at the beginning of the year. That's where it hit in May. That's where it bounced in, bounced in May, bounced a couple of weeks ago, bounced yesterday. Big number. Now that you're under that, if you don't get back up over there quickly, I don't see the case why you're not going to end up somewhere sub 260s by Thanksgiving, maybe even quicker, because this panic sometimes gets aggressive. So that's just my thoughts. Let's talk about what we're going to do now going into tomorrow. Now, if you looked at the trades just briefly, I went with this TUP first. You probably saw that stuff on the sheet. I went with TUP first as a short. This was one of the strategies I used to use a lot more up to mid to 2017 when the market got ridiculously bullish and these stocks started just going crazy. It was hard to short earnings plays on these verts. This one worked out pretty good. Managed to catch it at a really good point. Covered up on the first pullback because I don't like to hold these earnings ones because they oftentimes will nestle into the moving average and bounce. And this one, I'll tell you what, it held up pretty good. I have a tendency to flock a little bit more towards these now because of the way the market's been behaving. You've got, today you had BA with a really huge gap up. Beats earnings, significantly beats earnings, raises guidance, and then turns around and drops 10, 12 bucks. And why that's important, even though, yes, it's still green. The reason that's important is because, last quarter when companies did that, they had half-ass earnings and their stocks would go up $20 to $30. If this happened at the beginning of 2017 or any time throughout 2017, this would happen the first 6 months out of the year, BA would be up $30 today, right? It would be way to hell up there by now. No, different kind of tape, Now you're starting to see good news, great revenues, positive events becoming a negative for the market, where in the past they were a positive, right? Bad news was a positive for the market. So completely different tempo here, something you need to pay attention to. So let's go back. That was just a one-off scalper trade. And then I got into this BABA, and one of the problems I am having here is I got to say the market's surprising me a little bit too. I'm not shocked to see it or surprised to see it, but I'm playing a cautious role here. You know, I'm already shorting stocks that are down several dollars. Like, you know, I want to short things on green, and I got into this BABA, and it was kind of haggling around low a day. And I've already mentioned up front, I really don't like doing that. So I'm going to be uncomfortable to start with it, because I'm so conditioned over the last 4 or 5 years that these things just snap back when they hit lows. And then I just get out for small gains or scratch, or it gets a move and I'll put a stop at break even. And then it just keeps going down. And by the time I went down the second time, I had already covered for like $2 as an actual revenue earned from the trade, not like $2 in stock price. And I was like, I'm going to get back into this on the next bounce. I'm going to get back into this. I'm going to hit this Netflix. I'm going to short all of this stuff on a bounce. And I just literally sat there the rest of the day watching everything go down. Like, gee, is it even going to bounce? Right? Is that even a, we're not even going to see one today. Like, I can't even get a bounce to short something off of. So that kind of like just was one of those meltdown days. Again, you don't see very many of those. You usually have a good balance of up and down, but you can see this thing never will have one bounce, you know. But I was looking for a little bit more, like something a little bit more solid. We saw like yesterday where you had a stout run, but you know what? You just didn't get it. Some days you're on point with your predictions, and other days you're not. So it was okay. Now that brings me to Netflix. I had a little small tiny pop here on this one late. I finally decided, look, let me try a long sum of this, being down almost 30 bucks with a very, very small position. I mean, I'm like walking in there with rublets on the table. Like, let me see this bounce. You got a nice little reference point for a stop. I mean, we caught a okay bounce here on this one, but just like everything else, it didn't last. I mean, it turns around. Like, this is the kind of market you are. If you're long, you need to be sketchy on the button, because when this stuff starts running, you have to, I think right now, and this is where we talk about adapting to market conditions. A lot of traders will tell you my strategy never changes. Well, it does. It absolutely does. That's garbage. There's no one strategy that's going to last you for the whole entire life of your market career. What happens with your strategy is it takes on different formulas and formats. So the basis of your strategy will always stay the same, but how you handle that, that's what makes the difference. So kind of like in this market, it's like, I like counter trend trading. I don't mind buying the dip, but because there's a lack of buying the dips right now, and that the ramifications of some of these stocks rolling over $10 to $20, you can't afford to let it just roll down over the hill on you. You can't just add on the way down. You're going to get murdered, because you know, like you said, you got Netflix rolling over here $30-some in a day. You have to think, if you're buying it and it's down 5, then maybe it rotates down through low and ends up going down $20 more. It's possible. It's not always a guarantee, but it's possible. You also have to take those position size. I know it's like I'm a broken record when it comes to position size, and you got to scale those down in your areas. That way you get yourself a little bit of flexibility, because the volatility alone on these candles now are double, not even triple of what they were 6 months ago, or just 1 month ago. So kind of remember that your core of your strategy changes, but the way that you know, the formula in which you do that in certain types of market. There's a thing we call risk on, risk off. This is a risk off market. You don't want to get over aggressive on certain things. I mean, yes, it feels like you could be over aggressive on your shorts and it would work, and it is, but you know, when you're talking about you're going to go heavy short on NVDA, that's down $90 freaking dollars this month, almost 50%. I mean, any day, one piece of news, you never know, one little spark, tariffs get taken off the table or something like that, and boom, there it goes. Takes off $25, $30. So, you know, that's what you have to do, and you have to work your way through it. Remember, doing the aggressive things, if you don't have the right kind of entries, forcing things like market like this will really hurt you. So it was a pretty good day. I'll give it that. Not bad. some of this stuff is starting to look attractive to the long side. I got to say, when you're looking at NVIDIA here, buried in the, I mean, look, it's still going down after hours, probably on AMD. I mean, I know it was overbought to begin with, but you got no love and you're under 200. So to me right now, still, I would prefer to short bounces on this stuff, a couple of rallies. If it starts to get aggressive and they can build on those rallies, then cut those positions. Right now, that's the trade. You know, you're much better off. The value, even still with these sell-offs, is down to the short side because that's just the way it is until that changes. So really the key here for me today was the market moving under that 270. So anyway, guys, let's leave it at that. I've done enough yodeling. I mean, if you need some extra help, you're having some trouble with your positions, why don't you just reach out to me at support@thelincolnlist.com. I'll gladly answer your questions. You don't have to be a member for that. See if there's anything I can do for you. Maybe point you in the right direction or help you, reconfirm something that you already thought. Whatever it may be, send it over. Until tomorrow's market mutterings, thank you for your support by watching this video. Remember to visit thelincolnlist.com. Click on the Trade Room tab to trade with us. Take care. I'll chat with everyone tomorrow.